Sorry, I mean Ananya or Mananya, can you read? Just read there. Okay. So, which means that, Mr. Arjun, he has sold, the following assets during the financial year 2024-25, which is the current, I mean, the year which has just gone by. Okay. He sold listed equity shares for 5 lakhs. Okay. Now, these are listed equity shares on the stock exchange. So he has sold them for 5 lakhs, which he has purchased on 1st of April 2022. So, which he has purchased in 1st January. So that means it's a, he has held the shares for more than 1 year. So he will be entitled for the long-term taxation benefit. Okay. Now, he bought it at 5 lakhs, sold at 3 lakhs. Okay. He sold equity, he sold units of equity oriented mutual funds. So, next investment number two was mutual funds, which were, mainly invested in equity markets. So he has, sold them for 2,50,000, which he held, which he had purchased on 1st April 2022 for 1,50,000. Okay. So both these mutual funds and shares, he has held them for more than 1 year. Compute the long-term capital gains on the tax payable and the tax payable by Mr. Arjun. So it will be like this. Let's talk about the two equity shares and equity oriented mutual fund. The selling price is 5 lakhs, purchase price is 3 lakhs. Mutual funds, he bought them, sold them at 2,50,000 and purchased them at 1,50,000. Okay. So both are long term because he has purchased them on 22 and he's selling in 24, 25. Okay. Fine. So compute his tax liability. So the long-term capital gain will be, so there is no indexation benefit here in case of equity shares. So he acquired it. No? So that means the long-term capital gain on shares will be, so since the holding is more than 12 months, it is stated as long-term capital gain. So 2 lakhs is the capital gain on shares. And similarly, on mutual fund also, the capital gain is 1 lakh. He bought them at, 1,50,000, sold them at 250. So that means 1 lakh is total capital gain. So now we just calculate this total capital gains. So that means this total capital gains is both long term, it's called LTCG, long term capital gains from shares, 2 lakhs, and long term capital gains from mutual funds, 1 lakh. So his total mutual fund, and the shares, the long term capital gain is 3 lakhs. Now, exemption under section 112A, which is 1 lakh rupees. So I told you that 1 lakh, above 1 lakh, you are supposed to pay tax. If you are, either holding equity shares or mutual funds for more than 1 year, so up to 1 lakh, the capital gain is exempt. And this is coming under section 112A. Okay, you don't have to remember that, but just for, understanding phase. So 1 lakh benefit is there. So that means the total capital gain is 3 lakhs, which is coming from here, and 1 lakh is the exemption under section 112A. So that means the long-term capital gain will be 2 lakhs. Okay. So, the tax rate is 10%. So he has to pay 20,000 rupees tax. Okay. So we have not calculated the cess because the question is saying that ignore the cess. Okay. If you see the question, compute the capital gains and tax payable by Mr. Arjun. Assume both assets qualify as long-term capital gain and ignore the cess. Is it clear? Is it clear, Mananya?
Yes, sir. It's clear.
Okay. So in this case, so we move on to the next question. So we will just quickly complete this exercise. They're very simple. Only one more exercise where I'm going to spend time. So exercise number 3 now. So Mananya, can you read this?
Yes, sir. Mr. Ramesh, on the resolution passed 15th June 2024 for rupees 30 lakh. The company is pursuing payment on 1st April 2014 for rupees 20 lakh. He invested rupees.
Okay. Yeah, yeah. Just read. Just go and please read.
Viewed long-term section 54.
Okay. Have you finished reading? Okay. Now, Mr. Ramesh has sold a residential house property. When? On 15 June 2024, which is the last financial year, at the price of 50 lakh rupees. The property was purchased by him way back on in 1st of April 2014 for 20 lakhs. So that means he will be entitled for an indexation benefit because the asset has been held for more than 2 years. So if you look back on the first slide, if you're selling an asset after 2 years, you're entitled for indexation benefit. So he has incurred another 1 lakh rupees in expenses on sale. Okay, and then another question is given that he has invested 25 lakhs in purchasing another residential house on 1st of April 2024. So we will understand what does it mean. Okay, first we are going to calculate uh, because he will be getting some exempt. You have to calculate long-term capital gains exemption under section 54. Under exemption section 54. Why it is mentioned? Because he has invested some money in a house. So we'll understand what is section 54. Next, tax payable, net tax long-term capital gains and tax payable. Okay. So first let's start with, so he has purchased the house for 20 lakhs, sold the house for 50 lakhs, expenses were 1 lakh, and the CII is given for both the years. Okay. So we'll just go straight away to solve the question. So we'll compute his tax liability, computed the indexed cost of acquisition. So which is, 20 lakhs is his total, value at which he purchased the house. So if we just go back here, so this is his purchase price. Okay. Then we apply the indexation benefit and calculate what is the index cost of acquisition. It is 29 lakhs. So 20 lakhs has become 29 lakhs because it is 348 divided by 240, which is the cost of inflation index. So we can just look at it here. So this has been calculated using these two rates. 348 divided by 240 into 20 lakhs. Okay. So which is coming here. So that means his index cost of is income. Okay. Now let's compute his income. So we use the performer. Sell price is 50 lakhs. Okay. Which is given in the question, which is given in the question here. This is the selling price at which he sold the house. Okay. Which is given in the question here. So then, see, everything is linked. So you can always make some changes and, understand, the nitty gritty of this. So selling expense is 1 lakh. So he has paid some money as brokerage. Whenever you sell a house, you need to pay some brokerage. So he has paid 1 lakh brokerage. So the net sale consideration is 49 lakhs. Now the index cost of acquisition is 29 lakhs, which is here. Okay. So this figure has been repeated here. So long-term capital gain will be how much? 20 lakhs. Is that clear? Which is the difference between these two. Okay. Now, exemption under section 54. Okay. Now, what is section 54? So let's go to section 54. Just move on to the slides. Move back rather. Section 54. Mananya, can you read this section 54?
Yes, sir.
Just hold on. Just hold on. I have to start from the top. Oh, yeah. Okay, just hold on, Manana. Hold on. I'll just, give you a summary of this. So this is section 54. That means if you have made a capital gain by selling a house, okay, then you can, save your tax. Okay, you don't have to pay tax if you take an exemption under section 54. That means this exemption is on the capital gain on sale of residential house property. That means this is only in case when you sell a residential house property, this exemption will be available to you. Number one, to whom it is available? All individuals or Hindu undivided family. And it should be a long-term capital asset. Okay, that means you should have held the asset for more than 2 years and it should be a residential house property. And this gain will be called long-term capital gains. Assessee must purchase. That means if he wants to, avoid tax capital gains, he must purchase a new house. Okay. So you can, save your tax if you invest all the money in buying a new house. Now, it says that you have to buy the house either within 1 year before. That means you can even buy it before also, or 2 years after the date of transfer. That means when you sell the property within 2 years, you can buy a new property, or you can even buy a property within 1 year before. Okay, before the sale, you have a money, so you can buy it even 1 year before and save your taxes on capital gains for whatever you have sold now. And if you are constructing the house, then the new house should be constructed within 3 years after the date of transfer. So that means, first of all, this benefit is given only to individuals or HUF, and this benefit is only on capital gain on sale of a residential house property, which is classified as long-term capital gain. That means you should have held this asset for more than 2 years. Then this is called long-term capital gain. So the assessee must purchase. That means the person who has sold his building, residential house, he must purchase a new house within 1 year, or within 1 year before or 2 years after the date of sale, or construct a new house within 3 years after the date of transfer. Now, the exemption will be equivalent to the amount actually invested in new house. So whatever money he is investing, he will be fully exempt up to that amount. Okay, so we'll understand this through an example which is there, which we are doing. So we'll go back to the example. Now you can invest in even two houses if you want, but if your total capital gain is less than 2 crores. So if your capital gain is less than 2 crores, then you can even invest your money in two houses. Okay, this option can be exercised only once in lifetime of a person. So new house must be situated in India. Okay, the rule says that the new house should be situated in India. It should be this facility is available only once in the lifetime of the person. And if the long-term capital gain is less than 2 crores, you can buy even two houses. The rest of it, I'm just going to talk later. So let's go back to the question again. Let's go to the exercise number 3. We were, yeah. So Ananya, can you read? Sorry, Ananya, under exemption under section 54. Read it after this. Okay, so that means in this case, he has total capital gain was 20 lakhs, but he has purchased the house for 25 lakhs, so he is entitled for 100% exemption. Okay, so he has even spent 5 lakh more than what he was required to do, but he doesn't have to pay any tax because the long-term capital gain was 20 lakhs and he has been exempt under section 54, which says that he can buy a new house. Okay. So if he sells a house, he can buy a new house. Okay. And the entire amount which he's spending will be exempt. Okay. So that means he doesn't have to go pay any tax. So let's go to now exercise number 4. Okay. So this is a similar one. So we go to exercise number 5. Now read this exercise number 5.
Yes, sir. This is for everyone.
Okay. So this question is that, Mrs. Priya has sold her residential house for 90 lakhs when on 1st of August 2024. So she had purchased this property was in on 1st of July 2011 for 25 lakhs. Okay. So she's selling for 90, but she purchased at 25. So this is given here. Purchased 25, sell this thing. Then, the for the CII for both the years is given. In 2011-12, the CII was 184. In it was 24-25, it is 348. Okay. So he has also invested in two houses. Okay. So as we know that if the capital gain is below 2 crores, he can buy even two houses. Okay. So he has bought two houses. House number A for 30 lakhs, house number B for 15 lakhs. So first, we are going to calculate this thing. So 25 lakhs is the total purchase price. So his indexation cost will be, which we can just go back and see there. So which has been calculated like this, which is 20 lakhs. Okay. 25 lakhs multiplied by 348 divided by 184. So we get 47 lakhs is the index cost of acquisition. Okay. Now let's calculate his, capital gains. So I'm just going to make it bigger so that everybody can see it. So the sell price is 90 lakhs. The transfer expenses is 3 lakhs, which is given here, 3 lakhs. Okay. And the net sale consideration is this. Okay. And this is the, the indexation cost, which we just calculated, which has been done here. Okay. So we picked up the figure from here. So long-term capital gain is 39 lakhs 71,000, which is the difference of the two. Okay. Which is nothing but the formula which we have used, 87 lakhs minus 47 lakhs. So 39 lakhs. So now exemption under section 54. Okay. So Ananya, can you read this? Mananya, sorry. So which is given here, 39 lakhs was the total. So since she has purchased for 45 lakhs, so she will be entitled for the total. So that means there will be no tax payable by Priya. Okay, just read the remarks. Okay, so that means the law says that she can do it in once in a lifetime and she has purchased two houses, so she can't do it again. Okay, fine. Is it clear? Mananya, is it clear to you?
Yes, sir.
No, because we said we just saw under section 54 that she can, anybody can purchase even two houses. Okay, so in this case, she has put all the money in two houses. Her capital gain was how much? Was 39 lakhs, because the selling price was 90 lakhs and the net sale was 87 lakhs after the expenses, and the indexation cost was 47 lakhs. That means the long-term capital gain was 39 lakhs, and she invested everything in two houses, which was equivalent to 45 lakhs. Two houses, house number A and house number B, 45 lakhs. So since it is more than the long-term capital gain, so the entire long-term capital gain will become exempt. Okay, fine. Okay, now we come to exercise number 5. So we have done 8. Okay, 8 we have already done. So we are left with only 3 now. We'll quickly do that. Uh, so this we have already done. Okay, so exercise number 6. Sorry. Okay, just read this, Mananya.
Mr. Singh purchased
Okay, so now what is the purchase date? July 10, 2022. Okay, cost of acquisition was 10 lakhs. So he had done some improvement in August 22 by 22 lakhs. That means he would have made some more construction of the house. So total cost of acquisition plus improvement is 12 lakhs. Okay. Now the sale was done on April 24. Okay. 20 lakhs. Now just read this, Ananya. Since
Yes, sir. Same details. Same thing. We don't have any forward. Same price. Same hours. This is a good period because that's very focused. This is the capital gain. Short-term capital gains are taxed at the normal slab rate, no indexation benefit.
Okay, so that means this is a short-term capital gain. So he has purchased a new house, so he's not going to get any benefit because he has sold the house within 2 years. Okay, so this house was purchased and sold within 2 years, and it'll be totally a total short-term capital gain. So his selling price was 20 lakhs. He bought the house is 10 lakhs, done some improvements. So that means the total cost of house was 12 lakhs after the improvement. So he made a capital gain of 8 lakhs. So he has to pay a tax on 8 lakhs. Okay. And whatever house he has bought, new house, he will not be entitled for any exemption. So now the last question of the day. Okay. So just read this, Manane.
Yes, sir.
Now, we have done section 54. Now we are talking about section 54F. So this is also a very, very important question from your exam point of view. Okay. So it will take about 10 to 15 minutes to cover this question. So Mr. Ram, because we're going to understand what is section 54 also. So Ananya, are you there?
Yes, sir.
So just read again, I mean, this question, Mr. Ram. Now here, if you see this, he has sold a plot of land. Okay. Now, if you are selling anything other than the house, okay, uh, then the exemption under Section 54, which we just read earlier, was only when you were buying a new house. Okay. So that means you are entitled for some exemption under Section 54F. So let's go back to section. Let's go to Section 54F and understand what is that. Okay. Just read this, Ananya. Hold on. Now, just hold on. Now, this section 54 is a exemption section under capital gains when you invest your money in a new residential house. So you have to buy a house. Okay, you can't buy anything else. Both in section 54 as well as section 54F, the exemption to capital gain is only when you are investing in a residential house. Residential house. Read this. Okay, so this section provides a relief from paying tax on long-term capital gain if assessee invests his net sale consideration into purchasing of a or constructing a new house. So the word is used net sale consideration, which was not there in section 54. That means he has to, whatever amount he is going to get, he has to invest. Okay, net sale consideration. In case of 54, he was supposed to invest in only his capital gains. Okay, so there is a difference here. He has to invest everything, all entire money, not only the capital gain, but whatever he has, realized from the sale of a land or anything, or a jewelry or any equipment asset. He is going to invest the whole money. So now read this. When does the section 54 apply? Okay, now this condition is that you can sell anything and purchase a new house. You can sell a plot of land, you can sell gold, you can share shares, and you're making a capital gain. You're selling a commercial property, that means you have a commercial property you have sold, other than residential house. Because for selling a residential house, the exemption is available under section 54F. So here the section is 54F. The test section was just 54. Okay. So that means if you sell anything and you are making a capital gain, you can save your tax by investing in a new house. Okay, investment. Read, Ananya. Ananya, are you there?
Yes, sir.
Yeah. Okay, okay. Will you be able to read, or should I ask someone else, Ananya or someone? Now here it says that if you are selling anything, like you're selling a plot, the question we are doing was that he has sold a plot. Okay, so you can sell a plot, you can sell a gold. If you put your money in a residential house, either you buy it 1 year before, or or 2 years after the date of sale, or construct within 3 years. So these are exactly the same provisions which are there in the section 54. The new house must be held for at least 3 years. Okay, here the house must be held for 3 years, and the assessee should not own more than one residential house. If you're having one, you can purchase another one. Okay, fine. But if you're having already two, then you can't claim this exemption. Okay. Then the maximum exemption available under this section is 10 crores. But if you are investing more than 10 crores, only proportionate exemption will be available. So the formula is this. Can you read the formula, Ananya? So here the formula says that the entire capital gain, suppose the amount of invested house and new is same, okay, then the entire capital gain will be exempt. But if you are going to invest in the new house which is less than the total sale consideration, then only proportionate. If your sale consideration was 100, but if you have invested 80, that means only 80% of the capital gain will be exempt. Okay. So both the numerator and denominator has to be same to get. That means the entire net sale consideration should be used for buying a new house. So let's do this example. Ananya, can you read this example?
Yes. What follows?
Okay. So, uh, yeah. Yeah. Okay, so that means, if you look at this question, his total, his sale of net consideration was 50 lakhs and his capital gain was 30 lakhs. Okay, so which means that he has to invest entire 50 lakh rupees. He has actually got sale. So we don't look at the capital gain here. Okay, so capital gain we'll just take for calculating how much is exempt. Okay, so he has actually, invested 25 lakhs out of 50 lakhs. So only 50% of the capital gain will be taxable. Okay, so which means 30 lakhs minus this 15 will be his taxable capital gain. Is it clear, Ananya or others? So that means in this case, under section 54, uh, um, what was this? Section 54F. Under section 54F, the entire amount needs to be invested. Whatever is the net sale consideration should be invested. If you don't sell, if you don't, purchase a new house equivalent to the net sale consideration, then you will be entitled for a lower exemption. Okay. Important notes. Just read that. So you can just buy one. Okay. So this covers, most of it, but there is one more section which we should do. Ananya, just read this, section 54 EC. Okay, just hold on. Just listen to me. Now, if you don't want to purchase a house, okay, or if you are purchasing the house and still you are making a capital gain, you can invest some amount in bonds, okay, so which will give you exemption. Like, when I sold my residential house in Greater Kailash, and I had invested in bonds. I didn't purchase another house. Okay, so I can do even that. Instead of buying a house, I can buy bonds, which are called capital bonds, capital specified bonds. Okay, so this is called section 54 EC. Okay, just read this. Now this, now this benefit is available to all assets, which are classified as long term. That means you have held the assets for more than 24 months, like land, building, house, commercial property. So if you are getting a capital gain by way of, transfer of these assets, then you can save your capital gains by investing in bonds. Investment. Just read this, Ananya. 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 So these are called these bonds are issued by National Housing Society or REC Limited. This is a public sector undertaking. Okay, so these are all the companies which are issuing bonds. Okay, fine. This is National Authority of India or something like that. Okay, time limit. Let's just read this. So that means you should yeah, maximum investment. Just read this. Yeah, read this. Complete this. Yeah, lock in. Hold on. So here you have to invest your money in bonds, and the bonds are issued by companies like NHAI, REC, PFC, IFRC bonds. So the time limit is that you have to invest within 6 months from the date of transfer. So you make a capital gain, you have to within 6 months you have to buy these bonds. How much? Maximum 50 lakhs. Okay. So if your capital gain is less than 50 lakhs, you just save entire capital gains tax. But if it is more than, then you have to pay capital gain tax. Up to 50 lakhs, you will get exemption. Then the lock-in period of these bond is 5 years. Earlier it was 3 years. Now you will not get this money only after 5 years only. Okay. Okay. Just read type of exemption. Okay. So now let's do last question. Small example. So that means these bonds, whatever interest you get, they will be taxable on year-to-year basis. Okay. And there is a lock-in period of 5 years in this bond. So that means this, to summarize, if you want to save tax, you can invest in bonds. Okay. And the maximum amount you can invest is 550 lakhs. And the maximum time period within which you can invest is 6 months from the date of sale of the asset. And there is a lock-in period of 5 years. And it carries interest rate of almost like 5% currently, but keeps changing. And then it is taxable every year. Okay. So before we say, end of the lecture, so just one thing which, was there. Okay. Just read this Ananya, ye wala. Go to section 54. Okay. Now, only thing which, was more important was deposit in capital gains tax scheme. Now, as I told you that you are given certain time period. Okay. Like, you can purchase a new house within 1 year, or after 2 years for the rate of transfer, or construct your new house within 3 years. Now, this is pretty a long time. So the income tax department says, or the government says, that if you're taking a long time to invest, then you should park that money which you have earned as capital gain in a scheme which is called capital deposit and capital gain scheme. Okay, you go to a post office or a bank and deposit this money under the capital gains account scheme, and you can utilize this, you know, as and when you require to make a payment for buying a new house. Okay, and this should be done before filing your tax return. Now, suppose you have made a capital gain this year, and the filing date is say 31st of July 2025. So you must put the entire amount of capital gains under this account before filing your return. The last date of filing the return for most of us is 31st of July. So if you have made a capital gains and you plan to buy a new house or construct a new house, then you are going to take some time. So in that time, you must deposit your capital gains amount in a separate account where the money will be put into that account. It goes into a bank account, and it has to be done before filing your tax return. That means before 31st of July 2025 if the capital gains have arisen in the last year. Okay, so that's all. Any questions, please? Yeah, Navya?